Okay, let's kick this off. This is the inaugural first community call for pTokens, so thanks for joining, everybody. We're going to publish this on YouTube after we record here. So yeah, I'm Robin. I am helping with community for pTokens and just kind of helping things run in that aspect. The way this call works, we're going to go through our agenda, but as we're talking it out, feel free to ask questions. You could put them in the Q&A at the bottom, and we'll address them at the end of the call. Did I set this up to allow? Yeah, if you're shy, don't worry. You can ask an anonymous question, and we'll put it on the screen later. Yeah, so if you're unfamiliar with pTokens, we're a cross-chain composability project. We enable users to move any crypto asset across any blockchain. And this is the team behind pBTC, which brings Bitcoin to Ethereum. It launched to mainnet March 5th, and we're going to be launching pBTC on EOS soon, but I'll let everybody talk about that. Before we get into it really quick, this is, I know we want to go over how pTokens works, maybe trust profile, use cases in DeFi, upcoming plans on P Network we might go into, everything else about pBTC. I just want to go around and make sure we intro the team. So yeah, let's go around. If you guys can give a quick introduction on what you do and who you are.
Yeah, maybe I can start. So I'm the founder and CEO of Provable, and I've been working in the blockchain space for a while now, since 2012, and I've been involved in several projects. Today, I'm mostly leading the efforts of pTokens and of the P Network. So I hope that during this call and future calls, there will be the opportunity to share with community members what our plans are, and to collect feedback on what the community thinks our next step should be.
Can you hear me? Yes, maybe I can go next. So I'm Alice, and I've been working in the space for 5 years now, so quite some time. And at pTokens, I help with, have the project moving forward, and also communicate with other projects and have it integrated to boost this whole ecosystem to grow and achieve great results.
Hi, I'm Savannah. I am marketing manager at the pTokens team, and I basically help get the message out there and inform everyone what's going on and communicate with everyone, do a little bit of communications work. I'm really excited actually about the upcoming launches that we have. We're building a lot of momentum, and I'm really looking forward to finding out what blockchain you're most excited about bringing pTokens to next.
Hey, Greg, we're just going around doing some intros, who you are, what you do on the team.
Would you like me to go next?
Yeah, go for it.
Hello, everybody. I'm Greg Kapka, and I'm mostly in charge of the Rust code base, so sort of like the pTokens core, all the stuff behind the scenes. And sorry for being late.
Oh, no problem. Just kicking off.
I'm Alessandro, and I work on the front-end stuff on pToken project, and on the library side and the app.
Awesome. Ricardo, I'm just kind of going down my panelist list now.
Yeah, sure. Yeah, hi everybody. I'm Riccardo Persiani, and I've been working mainly on the EOS side, so both off-chain and on-chain. And I joined Provable like in 2018, and here we are with this brand new project, so I'm really excited about it.
Okay, so my name is Bogdan, and I'm also working together with Greg on mostly on the Rust code base for pTokens core.
Cool. I think, the only folks we have left.
We have Mauro next, I think.
Okay. Hey, Mauro, can you hear us?
Can you see me?
Can't see you, but if you want to go ahead and introduce yourself and what you do for the team, that's totally.
Yeah, I'm a software developer, and I worked on the orchestration of the whole pTokens components. Yeah. And that's it. Hi there.
And so, this is our first call. So let's just jump right into the pTokens primer. And again, if you have any questions, throw it in the Q&A and we'll get to it at the end of the talk. So, without further ado, can you give us a rundown of the project, Thomas, Alice?
Okay, I will do it. It's fine. So pTokens is a project that aims to connect different blockchains, because an issue that we can see and that's valid for all kind of blockchains is that they can live in their own world. So they are walled in their own garden and they cannot communicate with the other blockchains. And that's a problem that as a team we know pretty well, because we have also been working previously we have been working on an Oracle service for quite some time. And so we saw this need for projects to interact, cross-chain, because you have liquidity that's kind of stuck on one single blockchain and cannot flow freely across blockchains. One problem that we can see is the fact that, for example, Bitcoin today is the cryptocurrency with the highest market capitalization, but at the same time, it's if you're talking about decentralized products, the Bitcoin liquidity, it's out there on the Bitcoin blockchain. But on the other hand, we have most of the development in the decentralized finance ecosystem that's happening on Ethereum and on other platforms such as EOS as well. So there's kind of a barrier there. So yeah, that's why we started working on the pTokens project. That's because we want to tear down these walls and enable liquidity to move freely across blockchains to boost the decentralized finance ecosystem. So today we have PBTC that's released on the Ethereum mainnet. So you can basically leverage Bitcoin's liquidity from all Ethereum DeFi projects. And soon we also have Bitcoin released on the EOS blockchain, so that EOS projects can also benefit from Bitcoin's liquidity. Maybe Thomas wants to add something.
Yeah, sorry, I was having some issues unmuting the mic. Now I think every panelist can unmute the mic independently, so it should be easier if anyone wants to pop in and add anything. So thanks, Alice, for doing the introduction and explaining what's the opportunity there that we are trying to address. Yeah, I would like to add something. So I know that there is a number of projects out there that is trying to address that same issue, specifically for Bitcoin. We could count more than 10 projects that are close to release or have been released already, which live on Ethereum and provide some kind of Bitcoin functionalities in there, where you can basically have a Bitcoin-based token or a token that somehow tries to basically provide exposure to the Bitcoin price on that blockchain, on the Ethereum blockchain. Yet I think it's quite interesting to discuss how pTokens are different, as I think this is an important argument when we compare the different approaches. And one thing that we have done since day zero that I think is really important and at the core of our approach is the one of basically not being tied to any specific blockchain. So the system is designed to be agnostic to any blockchain. So the fact that we are using it to start with Bitcoin and Ethereum, for instance, is just because that's where there is most of the demand today. But the way it's designed, it will be trivial to add additional blockchains. And the reason why we are releasing this week, actually, PBTC on EOS is mostly to not just because EOS is the second biggest blockchain where DeFi is happening, but also because it shows how a blockchain, which is completely different from Ethereum or Bitcoin, can still be easily adapted and incorporated into this approach, which can really work with any blockchain, as I said. So this is quite relevant as a difference with other projects in the space, as the other projects are mostly depending on, they depend on a UTXO model, which is the model that Bitcoin and similar projects have. While thanks to the agnosticism that is at the core of the approach of pTokens, it will be possible not just to have, you know, PBTC on EOS, but also, for instance, to have, I don't know, EOS-based tokens on Ethereum, and any combination of this. So yeah, I think this is one of the biggest opportunities that today is undervalued and not really recognized much, because everyone wants, you know, Bitcoin on Ethereum. But going forward, I think the opportunity is much bigger, and our general purpose approach will pay back with time.
Awesome. Since the dev team is represented here, it's probably a good time to announce a cool opportunity for anyone interested in building on pTokens. Essentially, we're partnering with EthGlobal as one of the sponsors of HackMoney, which is a 30-day hackathon. So it's going to be really cool. We're going to offer up some prizes for anyone who builds on the pToken system. I think we settled on 3 prizes. 0.2 PBTC, and you know that's pegged 1-to-1 with Bitcoin. So I think it's over $1,400 US. So we're going to do 3 prizes. 1 to the best pToken based project leveraging DeFi composability. Another prize, the best pTokens based project leveraging Ethereum to add features to Bitcoin. And I know we'll go into that discussion a little bit about the benefits there. And the best overall pToken space project. So we'll be awarding all those to the winners in those categories. And if you missed the signups for the hackathon, it does say it's closed on the EthGlobal site, but the team assured us that we could sneak in a few latecomers if you are interested in building. So if anyone goes to the sign up before the start date of the hackathon, I think that's tomorrow, I'll drop the link in the chat and you can sign up and we'll be sure that you can get in and start building on pTokens. So since the team is all here, maybe you guys can go into a little bit about some of the proposed hacks or ideas that we have kicking around.
Yeah, I actually have like a list here, and then maybe we can comment them together. So basically, of course, all hacks include, Bitcoin on Ethereum, but I think some cool ones that we can list are MetaMask as a Bitcoin wallet. So as we all know, MetaMask is an Ethereum wallet, and today you can store all your Ethereum and ERC20 wallets, well, not just ERC20, all Ethereum tokens within MetaMask, but you need a whole separate wallet if you also are holding Bitcoins. So basically what we thought it would be nice to have is one single place where people can store all their cryptocurrencies. And thanks to pTokens, you can do that now, because you can have, Bitcoin on MetaMask via pTokens, and it's one-to-one pegged, so you can go back to Bitcoin and redeem Bitcoin anytime. So I think that's pretty cool. Then let me see. Well, another interesting one is BTC-backed stablecoins. So everyone knows about decentralized stablecoins. Of course, DAI is the mainstream one, but there are others coming out. And as we saw a few weeks ago with strong market fluctuations, it's important to improve on decentralized stablecoins. And one way to do that is to, expand on the assets backing the stablecoin itself. So including Bitcoin can be, you know, a nice touch. And yeah, I wanted to propose another one, which is, let me see if I find a nice one, which is to enable interest earning systems for Bitcoin. So today on Ethereum, we have cool systems to, you know, earn interest on cryptocurrencies, such as Compound, for example. But you don't have the same thing on Bitcoin. But at the same time, the volatility on Ethereum-based tokens and Ethereum itself is higher compared to the Bitcoin one. So if you would like to, you know, diversify your portfolio and also hold Bitcoin while still earning interest, an interesting hack that we are proposing to, you know, EthGlobal participants is to integrate the two things, so that basically via pTokens, people can hold their Bitcoins and they don't even need to know about, you know, Ethereum's DeFi. They just have their Bitcoins. They put them in this nice interface. And then in the background, you go through, you know, pTokens and Compound or another platform. You earn interest on your Bitcoins, and then you just, you know, get them. So I think these are three interesting ideas. And then we have actually put more ideas on the EthGlobal Discord. Yeah, I don't know if you have maybe other ideas as well. Someone in the team maybe has other ideas.
Well, if I can add something, I think that there are many interesting ideas that are based on the cooperation, let's say, of the Bitcoin and Ethereum blockchain. So one of the main drivers for the adoption of Bitcoin back in 2012 was actually Satoshi Dice, which is like a gambling game. So this was actually the first application on the blockchain, where basically we started seeing you know, the blockchain being bloated by actual usage, because people started sending you know, many transactions on the blockchain just to play some games. And I think that while today gaming is sort of happening in side chains or on the Ethereum mainnet in some cases, like with non-fungible tokens like CryptoKitties and others, and on the EOS blockchain. At the same time, I think the Bitcoin audience, which means the set of Bitcoin token holders, like Bitcoin holders, is really huge compared to the users that are active in DeFi or on the Ethereum blockchain. So since that community is much bigger, I think there is an opportunity to do projects where, for instance, you don't simply try to move Bitcoin to Ethereum, but you try to give like Ethereum powered instruments or tools to people that just are holding Bitcoin today. And the reason for this is that if you pick the average Bitcoin holder, they don't really know they can do anything, you know, smart with those tokens. They just are buying it for speculation. They just keep it there for many years. They probably don't even know what, you know, adapt is, what a how a smart contract looks like, and maybe they don't even care much. At the same time, those people are like a very big number, so it's possible to provide them with functionalities that you know, provide value to them. So Alice has mentioned some. I think one that sounds really interesting to me is for example, the model of pool together. I think is really interesting. Pool together is one of the most widely used dApps in DeFi, and basically what it does is providing something that sounds a bit scammy for like someone who is not familiar with his inner workings, which is basically a lottery where you never lose. So if someone was to tell you there is a lottery where you can play and you can either win or just get your money back, it would sound like a scam, right? You would say, how is it possible that I never lose, but I can make money? There is something fishy. And the reality is that it's not fishy, because its workings can be verified on the blockchain via smart contracts and everything. And the way it works is that basically when you play, you are really putting your money of your basically lottery ticket into a liquidity pool. And this liquidity pool goes into a peer-to-peer lending system on the blockchain. So this money in the lending pool are actually accruing interest. So, and the interest is what is used, the interest of the entire pool is actually what it's used to reward the winner. So what happens is that basically there is the lottery, which happens, I don't know, like once per week or things like that. I mean, it can vary in theory. And you either, if you lose, it's like if you had borrowed your money and then, and then basically you got them back from the liquidity pool. While if you win, you get your money back plus the interest for the entire week of the entire liquidity pool. So also for the other people. So the reality is that you're not really, winning or losing without losing anything. What you're really giving up in case you lose is the interest that your money have made over, the period of the lottery. So for the week, for instance. The point is that people don't perceive it as money they have lost, because in the first place, maybe they were not even lending them. So I think it's interesting. And what's interesting will be, for example, for Bitcoin holders to be able to securely play a game where, they send Bitcoin to a specific address. The address is really a pTokens address. So what happens is that those Bitcoin get converted into tokenized Bitcoin on Ethereum, and they could participate into the pull together lottery. And in case they lose, they just get their Bitcoins back on the Bitcoin blockchain. In case they win, they get back more money. So I think that's an interesting use case where people, without having to interface with the complexity of smart contracts and dApps today, they can just send a transaction and get a transaction back, which may either contain the same amount of Bitcoin or more. So yeah, that's another example of something that could be done during an hackathon. I mean, this hackathon lasts for 30 days, so I think it's quite long. So it gives participants quite some time to experiment and learn how systems like pull together work under the hood.
That's awesome. I know I've had some DAI sitting in pool together for a while.
Did you win?
No, I think my amount is too small, so my odds are not so great. But no, it's fun. It's super user friendly. So if we were able to get a PPTC in the mix, that would be really cool. Another thing I know that's really cool about the project is we're bringing a lot of market making and trading opportunities. We've seen some new arbitrage pools come together. I know we're on a few protocols. So, since we're about 30 minutes in now, it's probably a good time to introduce our guest. And thank you so much, Simone, for letting us learn about the new features of Zoom and kind of find our way.
Thank you for the invite.
So yeah, Thomas, if you want to, and Alicia and anyone, if you guys want to go ahead and introduce Simone, and we'll just kind of start a fireside chat. And again, if anyone has any questions, just throw it in the Q&A and we'll get to it.
Yeah, so I will briefly introduce Simone, and then maybe he can add something and say something about himself. So I've known Simone for a while, for several years, and he has been in the space for a long time as well. First as a crypto enthusiast, and then he quickly started to understand that the trading platforms were the tools he wanted to spend most of his day on, and this is probably what he started doing a while ago. So actually, he has been working on not just designing trading strategies, but actually implementing them along with a team to provide, different market making, arbitrage, and other kind of trading strategies for a few years. So he's really experienced, and I think he understands the market really well. And when I have the pleasure to discuss him, about the trading strategies and things like that, my typical feedback is just to asking him to slow down, because he just finds everything so intuitive while I don't. That is quite astonishing. So it's a pleasure to have him on this call to see what is his take, given that his expertise has traditionally been on centralized exchanges, and now there is a growing opportunity with DeFi platforms and decentralized ones. So having centralized and decentralized platforms interacting with each other requires basically expertise with both. So let's see what his opinion is on this topic.
Well, too many compliments. Yeah, thank you for letting me speak in your first call. As Thomas said, I started being interested in the cryptocurrency market since 2013, and around a couple years later, I started experimenting with arbitrage. At the beginning, I was doing it for fun with my small wallets of cryptos, and then the thing became more serious when we decided to create a company, and we started hiring developers. At the beginning, I was developing myself, but I'm not very skilled with the code. I dropped out of the university after 2 years when I discovered cryptos. So yeah, so now we have.
Don't worry, Simone. This happened to most of us. So
yeah, now I have some experience, and it's very interesting to see the new DeFi since in the last months a lot of things happened. For me, it's a very different world, because I was obviously in the last years I always worked with order books, and the many DeFi applications they don't have an order book, so it's quite different when you have to implement algorithmic trading and a lot of things you can do on an order book. You cannot do it obviously on a swap. So
what would you say?
The difference. Sorry.
Yeah, Alice, go ahead.
I guess the difference is also in the fact that with the decentralized, exchanges, you have to take into account, that blockchain transactions. So, for example, on centralized exchanges, I guess that the trading can be much faster compared to decentralized exchanges, and then you probably have to take into account more variables in the decentralized world. Is that correct?
Yeah. When you are trading on a centralized exchange, you just do an API call, and then when you have the response, you know your destiny. While on the centralized applications, usually you have to create a transaction, and then you have to wait for it to be included in a block, and then you still have the risk that the block is orphaned. So obviously it doesn't happen very often, but it's still when you are moving a lot of money, you cannot take risks. Obviously, of course, there are some risks even in centralized exchanges. We had many bad experiences in the past with bad exchangers. But yeah, recently, like the biggest ones, they are not that bad. So at least from reliability, API,
so we have seen in the last few years different approaches other than centralized exchanges. For example, I'm thinking specifically of like things like Shapeshift, right? Like Shapeshift, well, today it's probably not as big as it used to be in the past. But for a while, I think it was a platform that was widely used for people to exchange cryptocurrencies at market prices. What do you think, Simone, played a role there? What do you think that has played a role there for Shapeshifts, for instance, to get adopted that much in the past? And do you see any similarity with similar platforms that today are being provided in a more decentralized way, such as Banker or Uniswap, for instance, or Kyber, and many others? I can see at least a couple of things that they have in common, but maybe you can see others.
Yeah, so Shapeshift, I think, became very popular because it was extremely easy to use. Because in the beginning, you just had to create a trade on their website. So you just say, I want to trade Bitcoin to Ethereum. And they gave you an address where you could send your Bitcoins. And you have to provide an address to receive the Ethereums. And then you just...
That's a transaction. You're basically asking users just make a transaction, right?
Exactly. So we just, like in a minute, you could do a trade without even having to subscribe to any service. Then obviously there were some issues with them. They were accused of money laundering and other stuff. So they had to create a account system and also implement KYC for the users. So I think they lost a lot of users when they did that. And obviously because they made it very much complicated now to do a
transaction. I guess with DeFi and like on-chain swaps, we don't really have the problem of lack of transparency, at least. So we know exactly what's happening under the hood. And I mean, Shapeshift had to apply KYC because they were an intermediary. So they were doing a financial intermediation. And actually, you didn't really know what was happening under the hood. So they could not just stop the system, but they could actually potentially, do censor some transaction, or they could, for instance, settle as they wished under the hood. While with on-chain liquidity pools and systems that today exist in DeFi, this is not really a risk because, well, first, people don't really have to subscribe, right? They just send a transaction, and second, everything is transparent, so you know exactly where money is going. Do you think that, I mean, you mentioned the risk of like having a higher entry barrier that could basically move many users away to different approaches, or the barrier of KYC in some cases, and similar things. Do you think that, I mean, KYC is there for a reason? I mean, people hate KYC because it creates friction, but the reality is there for their own protection. I mean, because normally when people lose money, I mean, crypto users probably mostly don't, but I mean, normally in financial markets, when people lose money, they just look for someone to blame, and normally they blame the regulators, saying you have not protected us good enough. And that's why regulators are actually there, to basically create a market which is fair for the vast majority of users, meaning that they apply some protections. And these protections take the form of KYC, and we know the friction they create, right? So unfortunately, there is friction, but it gives protection in exchange. Now, with things like Shapeshift, now there is extra friction, and there is a risk that is somehow managed. Is this risk, does it exist, in your opinion, in DeFi platforms? And how can we manage it if it does? Say I'm like the thief of, I'm not, but let's say I'm the thief from last week's attack or things like that, and I use a platform such as Uniswap, Bank, or Kyber, or whatever, to exchange a token for another. The platform couldn't stop me, but those money are technically dirty. So how does it affect fungibility? How does it affect this platform? Is it a problem at all?
it's a lot of stuff. So I think that yeah, you're right. On the centralized applications, there is a lot of transparency. So I don't think that you could use those type of platforms to to wash crypto. Yeah, Shapeshift was in fact used by a lot of people that were stealing cryptos to clean them, because you could, I mean, they were doing it as an intermediary, so you could send them Bitcoin, and they would send you like Ethereum that were taken from a different wallet. So an external party would lose any trace of your money. On decentralized applications, I don't. Yeah, everything is public. So I think for regarding the risk, you were saying that if you sent money to Shapeshift and they lost it, then of course you had to blame them, and it was a risk because they could disappear at any moment. But I think yeah, on DeFi there is still a risk. There is, I mean, there is not a custodian risk, but there is still a risk derived by the fact that all those applications are not well tested yet. So there are some issues, and it happened often in the last months that money was lost because of bugs or unexpected things that happen. So I think there are still ways outside DeFi where you could clean some cryptos, wash some cryptos, like Mixer.
That's not a financial advice, I guess.
No, but yeah, I mean, crypto was made to be unstoppable by anyone. So I think this is the side effect that we cannot eliminate.
Well, I think, I mean, I personally, I agree with you, while most regulators probably don't. But I mean, the important, the big question here, in my opinion, is what's going on in DeFi today, considering that, so, I mean, tens of millions were technically stolen. And people now are asking themselves, are asking everyone. And so I will ask you this same question. And everyone is saying, like, is the thief entitled to keep those money, since he just followed the rules of the game? I mean, this is not technically, he didn't really cheat. He just, you know, applied the rules of the game, sent a transaction, he got the money. So, you know, he was just better than the developers who have bootstrapped the system itself to understand what their system did. And they just leverage it to take an advantage, a financial gain in this case. So people, similarly to 2016, when there was the DAO hack and people lost money for a bug in the contract, they're asking themselves, so was that basically, I mean, is it true that, you know, code is law, or is it not? Who chooses what's right and what's not? And in this case, I mean, let's say, let's give an example. Let's say you are a trader and you're writing a bot that somehow does arbitrage between a centralized exchange and, I don't know, Kyber. Now, let's say that the Kyber contract has a problem because of network congestion. You make a bunch of money because of it, because maybe you have a bot that takes advantage. I mean, is this something that you should rightfully be doing? Or is it, I don't know, is it even an ethical question? I don't know. I mean, what's your take on that? What do you think? Is it something that you consider is something right to do, or is it not?
So usually on cryptocurrency exchanges, there were some situations where like the exchange was not reliable, and people made money and people lost money because of it. And I don't know, sometimes they were treated like nothing happened. Other times, like there were some rollback of trades and stuff like that. Or maybe the exchanger refunded some of his customers with their own money. On DeFi, obviously you cannot ask for a refund to anyone, I think, except maybe from the team that made the DeFi application. But I don't know. Yeah, you mentioned the DAO hack, and I was thinking about it because it's a very similar scenario. And I think the only answer can be found in court if somebody create a lawsuit for the thing that happened. Because yeah, you're right. Technically, the guy was exploiting the code without without stealing, technically, I think. But still, people that committed their money and they lost it. They didn't. They didn't know probably that this could happen, and.
But
So
is it? I mean, is it? I mean, whose problem is it? Because it's like saying, I didn't know the law. Doesn't mean you didn't break it just because you didn't do your homework. I mean, here, which I mean, this is a question for everyone, right? I mean, DeFi gives you transparency, but I mean, I'm wondering how many DeFi users actually have the tools to understand if the system they interact with is safe. I think most people don't really know if the system is safe. They just rely on trust. They say, I trust an authority, and this authority is telling me the system is safe.
Yeah, I mean, it's actually nice that you mentioned the DAO hack, because I remember when the DAO was deployed and people started investing in the DAO, and that's a funny story because everyone started investing in the DAO, and everyone thought that the Ethereum leaders had checked the DAO and confirmed that it was secure, but they didn't. I mean, like the audit and the verification for the code of the DAO came out a few days later, a few days after the crowd sale had started, and still people put millions in it without anybody to check that. So that's funny because, I mean, like, of course, if you don't have the technical capability, you assume that someone else already checked the code and that the code is safe. But at the same time, maybe nobody else has checked. So yeah, that's an interesting question. And I think that it's interesting because over the past 4 years, the ecosystem changed a lot and it has grown a lot. It has improved a lot, I think, but still we came back to this same question and to these same issues that we had 4 years ago. And we don't really have a solution yet. But yeah, I guess we will find out soon, since I think MakerDAO was sued for losing money. So yeah, we might find out.
If I can add something on this, which is I think something to deeply think about, is that compared to 4 years ago, today we have something much more dangerous in the space, which is people like Simone that are traders and they are looking to, they are watching the ecosystem. They are putting money, they are putting liquidity on financial tools. It's not just a single experiment like the DAO. It's not a game. It's a system where people are starting to, we are starting to measure it with billions. We are saying like DeFi has approached 1 billion. So this is not a game anymore. This is a system where people are actually putting real money. So I think we should ask more from the ecosystem, and we should ask more also from people that are bootstrapping this project, in case we think they have and they should have any responsibility. I've seen in the last few days that the crypto Twitter is saying that basically, people in the crypto Twitter sphere, they are arguing that maybe we should ask to projects to in the DeFi space to start small and grow slowly, or until at least they can give some guarantees on the security of the code. For example, saying, I don't know, a given trade should not be bigger than, you know, $100 or things like that. This would enable people to experiment. It wouldn't stop experimentation, but still it will create higher standards. So as a trader, do you think, Simone, do you care about standards, or do you just care about opportunities? I mean, let's say that there is like a new contract with a bunch of money, and there is the opportunity to make money, but you are not 100% sure the contract is safe. Do you risk your money with something like that, or would you rather wait?
That's a difficult question.
The easy ones are boring, so.
No, I think, well, it depends on how much money I have to risk. But of course, if I found something in a situation like that, I would probably try with a small amount of money and then increase when I feel comfortable. Yeah. So yeah, I think you're right. It could be a good idea to cap the maximum amount of liquidity that a certain application can have in a certain time frame. So
yeah, I think it's really dangerous because sorry to interrupt. You can finish, then I want to add something.
Yeah. Okay. Yeah, I think yeah, also because there is not a clear line of what is considered like a malfunction or an opportunity, because like even in centralized exchanges, even in the big ones, sometimes there are opportunities where obviously some people lose money. Because I don't know, for example, even if, for example, an exchanger starts having issues with fiat transfers, like what happened with Bitfinex last year, then people cannot withdraw or deposit the fiat currencies, and or maybe they can, but it's very slow. So what happens is that the price can move differently from other exchangers, because of course when you have the same asset on different markets, the only thing that keeps the price like completely matched are the people doing arbitrage. So if you cannot move one asset in and out easily, then the price is not the same on different platforms. And yeah, so it could be that if you have fiat currency on Bitfinex, for example, and the price is higher than another exchange, is this something normal or not? It's part of the issue you were talking before. So is it damaging you, or is just a characteristic of the markets?
That's a good question. I mean, I guess. I mean, I think in most cases, also with DeFi platforms today, there are many marketing efficiencies because it's hard to. There is friction to do many operations. So, I mean, things like pTokens and pBTC, for instance, should help market makers and markets in general to be more efficient and to align prices better, which is better for everyone, because it just creates a situation where it's also harder to for the casual buyer or someone that is not proficient to get the right price for an asset. So yeah, I don't know if this answers your question, but I think marketing efficiency is still very high, and we need like more projects that try to tackle that, because if not, people get hurt, and that's not what we want. So yet, I mean, with the growing complexity of the ecosystem, it's also something else that grows is also fragmentation of liquidity. So I think it's important to to find new ways to move liquidity more easily around, so that those risks don't keep growing.
I think on the DeFi we have some things like the flash loans, for example, that can improve liquidity on, or even like, for example, synthetics, where you create liquidity out of anything, like out of nothing. I think there are some applications where you could have more liquidity compared to a centralized system, and so it will be interesting to see how this all develops in the next year.
Yeah,
I think we should be careful. For me, it's not. I'm not comfortable at the moment in putting a lot of liquidity on these new protocols, because
I think nobody is after last week. So
yeah, because doesn't look they are ready yet.
Yeah, I mean, speaking with some projects that I would rather not mention in the space, they were telling me that there are many market makers and people that trade on their platforms while their platforms were never audited. So basically, those people were moving like a lot of money, mostly based on trust of authorities, which in that case were, maybe the founders of the projects or things like that. And I think this is like something that happens very frequently today. So probably like a huge opportunity in this space, which I have no idea how to tackle, but I'm sure someone else will somehow fix, is making simpler tools to analyze the risks for each platform. Like saying, I don't know, if you use this platform, these are the guarantees you're given. You can verify them in this way, and it assumes I don't know, 5 other platforms will work as intended, or it's just an independent platform, so it's sort of lower risk. All these kind of things, they can help. Maybe with things like scores. If you score a project, it's easier for the average Joe just to say, okay, here there is a big opportunity. The risk level is 80. According to this authority. And if we do something community driven that is sort of simple like this, I think that users will benefit a lot from this, while traders I mean, in some cases may just prefer to wait depending on the size of the opportunity. In others, I guess they will just go ahead and take extra risk. So yeah. I think it's really interesting. And I mean, it's great to have people like you that are working already on not just making tools for DeFi, but making tools that basically sit in between centralized platforms and DeFi, so that we can also benefit from aligning prices and things like this, which is really important, because today, I mean, trading in DeFi is really complex. If I want to buy, I don't know, 100,000 DAI on a decentralized exchange, I mean, I can do it with platforms like Curve or things like that, but there is sort of a risk. And if I'm trying to look at simpler platforms, the liquidity is just very low. So
yeah, as an arbitrage person should look for opportunities where there are like platforms that have a growing user base, but they don't have a lot of liquidity, so the price is not super stable. These are the platforms where you can profit the most, because by increasing the liquidity, you can take some margin on on the trades. So I think market makers can help the new platforms grow faster, because they will provide the liquidity taken from centralized applications, and create a bridge to the two worlds. I see that there is a question.
Yeah, we do have a question.
Yeah, there is. Yeah.
Just going to throw it in here. You guys can see the question?
Yeah.
Yeah.
So
So, you know,
maybe we should
yeah, just so everyone knows later. Until now, the trade of assets between blockchains has been the exclusive purview of centralized exchanges. As cross-chain composability begins to de-silo these assets, what do you feel will be the near and long-term effects of projects like pTokens for the price discovery in the space? Cool, thanks for that.
Yeah, that's actually a very interesting question and all but trivial to answer. So good luck, Simone, every time with this. I don't know what's your opinion. Like basically, I think he's asking that basically normally when you want to trade assets that live on a different blockchain, like Bitcoin and Ethereum or Bitcoin and EOS, things like that, normally you do it on a centralized exchange. Now that we can do it thanks to things like pTokens on different blockchains, what will be the effects of this for the price discovery? Do you think, Simone, they will affect price discovery long term, maybe?
Yeah, I see it as something that will facilitate the growth of liquidity in the market, because like another aspect on the DeFi that I saw that is very different from centralized markets is that everything is connected. So you can do, even in a single transaction, you can do multiple trades using different DeFi platforms. And this is something that didn't exist in the centralized exchanges before, because in a centralized exchange you have to do an API call, and then if you want to do an arbitrage, you have to do another one to another exchange, and you have the risk that when you do your first trade, the second one doesn't go through, and you're stuck with the money that you don't want because you buy a currency and then you have to sell it when you do arbitrage at a higher price, hopefully. So you buy it and then you have to sell it, and you can't, maybe because the exchange API system doesn't work anymore.
Right.
So also there is some delay when you use different exchanges, because maybe sometimes you have to move liquidity, and if you have to move like Bitcoin, you have to wait maybe an hour. If you have to move fiat currencies, you have to wait a couple days or more. So having everything in the same, like Ethereum based tokens is completely different, because you move around whatever you want in seconds. So if
I have just one. Yeah, sorry, go ahead.
So if the whole market funnels in Ethereum based the DeFi applications with pTokens providing also currencies from other blockchains, it will be like the most liquid market we ever seen in crypto, I think.
I have one last question before wrapping up, which is like just a follow up on this question that you were just asked. And like, do you think having more transparency on trades and on actual volumes on chain somehow provides stronger evidence around the real price of crypto? Because today there are arguments saying that volumes on exchanges are mostly fake, or that in some cases they are being bought with fake money, or I mean some claim those things, mostly because they are not verifiable, and they say like we don't know what's happening under the hood on exchanges. Yeah, so what we call the price of an asset is just today is mostly the claim of big exchanges on what they are saying volumes are and where a given asset is trading. What happens with DeFi? Let's say there is huge liquidity on chain. This is not possible to fake, right?
Yeah, that's a good point. While using many different exchanges, I noticed that a lot of them they fake they fake trades, they fake volume, they also fake maybe order books sometimes.
Yeah.
So yeah, of course, like you can see exchangers claiming they have like $300 million of volume on a certain pair, and then you cannot buy like $1,000 without losing like 20% of without having like 20% of slippage. So yeah, there are a lot of exchanges that fake like more than 99% of their volume, and also there are market manipulators that can act if they are complicit with the exchange owner. They can do whatever they want on the order books.
Well, not on DeFi, unless you have a backdoor in the smart contracts that nobody noticed.
Yeah, so on DeFi, it will be a lot harder to fake volumes. And of course, you cannot fake volume by out of nothing like many exchanges do. You can do it maybe like moving real cryptos, but then people can see that you are the only one doing volume. So it will be a new challenge for bad market makers.
Cool. So I think your conclusion is that basically it does help price discovery, but I guess in the long run, right?
Yeah, when the DeFi pairs will be more relevant compared to decentralized ones, then we will see, I think, many changes in the price discovery.
Yeah. Cool. Thanks, Simone. I don't know if there is any other question for Simone from anyone connected.
No, but we're running low on time, so it's probably a good idea for us to wrap up. And if anyone has any questions after the call, or if you're watching this video, we're going to publish to YouTube later. If you're watching on YouTube, have a few questions, then you can visit our Telegram channel. I'm going to throw it in the chat here. It's t.me/pTokens, PTOKENS. Yeah, so I just like to thank everybody for being here. I'd like to thank our guest, Simone. Thank you so much.
Thank you.
And yeah, thanks to the team for taking a quick little break. I know you guys got some deadlines today, so keep an eye out for some pTokens news.
Cool.
Yeah.
Thanks everyone.
Thank you. We'll be doing this every week, so bye.
Cheers.
Bye, thanks.